This year, we also have a panel of top investment managers, and they're going to tell us how the global investment outlook has changed since then, and also give us their latest assessment of where it's going. To moderate for us today, we're delighted to have Mr. Albert Goh, Chief Investment Officer of External Managers at the Hong Kong Monetary Authority. And he's joined by Chris Gradle, Co-founder and CEO at PAG, Bob Prince, Co-Chief Investment Officer of Bridgewater Associates, and Michael J. Sachs, Chairman and CEO, GCM Grosvenor. So please give them all a warm welcome.
So welcome to the panel on risk takers. My panelists need very little introduction. I'll go through them quickly. Chris Gradle, founder and CEO of Asia's largest alternatives manager, PAG. Bob Prince, co-founder and CIO of the world's largest hedge fund, Bridgewater. Michael Sachs, chairman and CEO of the world's largest alternatives fund of funds manager, Grosvenor. Please give them a hand. Let me just kick straight off with something on all risk takers' minds, the US elections. Michael, you're first up. We were told that it will be a very close fight. Even Taylor Swift and Elon Musk had to take sides. We even moved our own summit to now and November, just in case there were recounts. But in the end, we had a stunning Republican clean sweep. Michael, I know you're a blue blood Democrat. What went wrong for the Democrats? If you could just roll back 6 months, is there anything that the Democrats could have done differently?
So in the interest of full disclosure, Chicago was privileged to host the Democratic National Convention this summer, and I was privileged to chair the host committee for that convention, which was a lot of work. It, I think, worked out very well for Chicago. It was a nice 4-day commercial for the city, and everything really went well. It was probably the most successful Democratic National Convention that we've had in 50 years, maybe ever, which accompanied one of the least successful elections we've had in quite a long time. I think with the benefit of hindsight, there were a number of factors that made this a tough election for the Democrats, despite polls that showed a close race. And it was a decisive victory. I believe 48 out of 50 states, Republican vote share increased. In my state of Illinois, where President Trump lost 2 elections by near 20 points, he again lost this year, but only by 8 to 10 points, 12 points, something like that. So major shift, even in the true blue state of Illinois. When we look with the benefit of hindsight, we had what people call a wrong track election, where 67% of America thought the country was on the wrong track. We had real impacts from inflation that made, despite some wage increase actually, made economic condition challenging for people in particular, for young people, but really for everyone. You had an immigration problem, you had two wars, and then you had a process by which President Biden stepped down, Vice President Harris was nominated, that took place inside the Democratic Party and didn't really involve a normal primary where the public got to know the candidate well, got to understand the policies, and where there was, frankly, some competition amongst candidates for ideas and for communications. So when you look at all that, I'm not sure that it's the outcome of the election is a huge surprise, and I don't really think that there's anything that could have been done 6 months ago that would have changed that. Had President Biden stepped down 18 months ago, maybe even 12 months ago, had you had a full open primary, multi-state, you still would have had those fundamental issues of inflation and immigration and wars. You still would have had a wrong track election. But it's conceivable that some candidate, perhaps Vice President Harris or a different candidate, could have connected with people, communicated through. But with the way that things went, I think it's not a surprise, and I don't think there's really much that could have been done in a 6-month period.
Okay, very good. I'll switch over to Bob. Bob, many of your alumni held senior positions in government, and your former CEO will soon be a Republican senator in Pennsylvania. So you must have an inside track within DC. As the election smoke clears, which is the title of one of your videos, what impact will the new administration have on the economy and the markets?
Well, I think at this point, there's just a massive amount of, good point. I think at this point there's a massive amount of uncertainty, obviously. You know, Donald Trump, that's his currency. He creates uncertainty intentionally. But, and so in the, kind of in the near term, that's obviously a negative for the markets. Markets don't like uncertainty. But as you look at the policies, policies are probably going to be pro-business, but they're probably also going to be pro-inflation, which creates kind of an interesting problem because there's a desire for a cut in interest rates, but if the inflation rate holds up, then that can preclude that cut in rates, which I think sets up an interesting situation in 18 months from now when the Fed chair comes up for a new appointment. And so as you sort of project out the policies, which, you know, tariffs, fiscal stimulation, and constraining the workforce, those all sort of push toward us not getting to the 2% target inflation rate. And then if we come in here 18 months from now and we're not quite, you know, settled at the 2%, what if we're settled at 3%? There'll be a certain amount of inclination to have a Fed chair that would accommodate that, right? Given Trump's making the nomination. So he would at that point want lower interest rates anyway, and then you get a steeper yield curve and so on and so forth. So, and at the same time you have the debt problem that we've all talked about. Which has not been a problem so far, but it lingers out there in the future. I think if you put all of those things together, it creates a likely economic scenario which is, I think of it as a higher nominal growth environment where spending actually stays higher. You know, household balance sheets are in pretty good shape, and there was a substantial deleveraging over the prior decade, which allowed for that. Wages are pretty good, and a lot of the spending has been financed by income, not credit. So you have the ingredients actually with the fiscal stimulation continuing to have a somewhat higher nominal growth environment in the future, which precludes the degree of interest rate cuts that people were looking for before. Maybe causes bond yields to drift up some to get a little bit of a risk premium there. But I think with respect, but actually supports equities because that nominal growth, that nominal spending is revenues, and if for companies that have pricing power, that can flow to the bottom line, and that automatically gives you sort of a nominal growth of earnings. And then if you could buy it at a decent yield, that's actually not a bad expected return. The challenge in the equity market is that the last decade, which was so fantastic for earnings, is fully priced in to happen again. We just had probably the best decade in history for earnings and one of the best for stock prices. And now the markets have discounted that and more for the coming decade, right? So that is going to be a challenge. So I think it for the market in general. But you know, inside of the equity market, you do have these beneficial characteristics of probably a reasonably favorable nominal spending environment. So it's a highly uncertain environment for now. We're kind of at low risk. Probably in time, you have those conditions, and generally favoring an environment is better for stocks than for bonds. But we'll see. We'll know more in 6 months.
All good for us. Let us move on to China. Chris, your recent deal involved buying over 500 shopping malls in China. You are now the world's largest manager of shopping malls. Some say that you're absolutely crazy. You know that they have online shopping in China, right? But now, it looks like you bought right at the bottom of the market. So you are an absolute genius. A fine line between crazy and genius. What is needed to attract more investors like you?
I guess, I mean, we're maybe taking a step back first, and I'll come to that. You know, we're sort of as a regional firm, we're constantly looking across the region where the sort of best opportunities are. And honestly, in a market as big as China, there's always going to be something to do. You know, and the areas where we've been active, most active in China recently, being on the public equity side, on the hedge equity long short. We also launched actually a long-only China product because we felt valuations were reasonable on a medium-term outlook. And actually on buyouts in China, where we actually feel that valuations are reasonable, where financing is available at reasonable prices, some of the cheapest financing in the world now. You know, we actually think we can buy cash flows at very reasonable prices. So, you know, that investment, you know, is the biggest buyout ever in China. It's the biggest buyout financing package ever done in renminbi with local banks. So it's, I guess, a reasonably big bet. But we feel, you know, it's a great business with very, very predictable cash flows. These are mass market malls, which focus on where people spend their weekends, F&B and kids' entertainment and all these things. Yeah, we think we got a great deal. But as you know, as we talk with our investors, I guess they fall into three groups. One is absolutely no way, China. And that's mainly driven by geopolitics. And, you know, I think as somebody who believes in the benefits of globalization, I think it's sad that we have that, but it's probably not going to change in the short run. Then we have the people who are on the sidelines, which is probably the bulk of investors. And, you know, I think they're sitting on the sidelines because, first, probably for, you know, three main reasons. One, waiting to see what happens with the economy. I think it's very, very important that the government continues to support the economy and that, you know, I think they're very good signs, green shoots, that the economy is recovering. But I think they need to not take their foot off the gas pedal, you know, so that recovery can still be fragile. So I think that's important, and people want to see that. I think secondly, you know, to be frank, performance of people's China portfolios in the last 3 years has been challenged. You know, most asset classes, you know, people lost money, and many investments are still stuck in China. And, you know, I think people want to see, it's very, very important that the IPO market sort of reopens, that M&A gets restarted again. And, you know, I was encouraged to hear Mr. Wu of the CSRC yesterday stating that this is something they're trying to do. But we need that dynamism. So people need to see their existing investments cash coming back, and need to see there's ability to make money. And I think capital will come back, because I think most investors are pragmatic and see that this is a huge part of the world economy. And then the third group are the people who are leaning in. And, you know, I say the Middle East is probably the biggest part of that, you know, who really see two things. One, contrarian, think there's a lot of value there today. And secondly, you know, it's interesting. The U.S. is no longer a big customer for the Middle Eastern oil. I mean, that's a fact. And I think, you know, talking with clients there, they don't want to take sides. They want to be unaligned. And they are underallocated China and the East and Asia. And I think, you know, we're seeing strong capital flows into the region from that part of the world, which is obviously, we think is good. So, you know, I'm optimistic that if, you know, if these things can be addressed, then, you know, capital will, you know, will come back.
Please continue to lean in. Bob, the Bridgewater All China Fund has been a huge success, winning the Golden Bull Award 3 years in a row. So you're a foreigner making money in China, where many have failed. So you clearly have an inside track again with the Chinese policymakers. What is your secret sauce?
Well, it's not the policymakers. Yeah, we're pretty far out on the tail of a contrarian on China, I think. And in fact, our global portfolios, we've been overweight China. And the returns inside of China have been good. But I think you have to recognize that how we actually go about that is we do it in a certain way, which is that we start with a balanced portfolio across assets, meaning the risk is balanced across assets, where we try to neutralize some of the macroeconomic influences and just really isolate the portfolio on liquidity conditions and risk premiums in the country. And so within China, that's actually been very beneficial because given the weakness of the economy, coming out of a period of weakness, deflation, and so forth, that's actually encouraged, you know, and then with the pullback of liquidity back to U.S., risk premiums are up. Then when you inject liquidity in that environment, asset returns are good. But the composition of those returns, if you look across a balanced portfolio is done well, but the composition of those returns has been much more in the bond market. And it's much more in the commodities markets and not in the equity market, right? Because the equity market was hurt by the weak growth, but the interest rates actually more than offset that if you balance your risk across those assets. And then with the policy shifts this summer or in September, you know, where it manifests shifted from the bond market to the stock market, but you're still getting that on average across assets, you're still getting the benefit of the accommodative policies and the low interest rates.
Well done. Hope you win the next Golden Bull. Let us move on to Hong Kong. As I did my research for this panel, I discovered a strong connection between our panelists and Hong Kong. So Bob, sorry to put you on the spot. In Hong Kong, property ownership is a matter of public record. Everyone in Hong Kong will be delighted to know that you've just bought a mansion in prime Hong Kong, Kadoorie Hill to be exact. Robert Ng says that it's the most exclusive location in Hong Kong. Please give Bob a hand. You bought at a time when sentiment for Hong Kong property is still weak.
Everyone's invited for dinner.
Bob, CIO of the largest hedge fund in the world, please share with us your investment thesis.
Well, my wife loves Hong Kong. I can't believe how much of a conversation topic it is that you bought an apartment somewhere. But anyway, no, I mean, I guess the very, very short rationale would be, you know, solid fundamentals, negative sentiment. And from an investment standpoint, that's always a good combination. But I think as you kind of go beyond that, I'm not a real estate speculator, so that's not really nearly enough. But I think from a business standpoint, Hong Kong is what it's always been, really. And I think that the prospects, even for Hong Kong in relation to Pan-Asia, are tremendous. As we get, expansions in capital markets across Asia, you go across Asia, Asia is really vastly under-securitized, and there is potential for Hong Kong to play a very important role in that, so there's a lot of potential growth there. I think when you look at the Greater Bay Area, it's a fabulous concept. Like, imagine that you put Silicon Valley next to New York and tied them together somehow. Like, that's a dynamite combination, and that's a little bit of what's I think, out there. And then I think from a personal standpoint, from a Bridgewater, business standpoint, we do business from the north to the south of Asia, and we have great clients, long-term clients all along, and Hong Kong's right in the middle, right? So everything is accessible from here, great new airport, and then literally from a personal standpoint, fun, great city, great culture, great restaurants, but the final test was I did bring Sharon here, and she loved it, and so we're like, done.
That's a good reason. On behalf of all Hong Kong homeowners, we thank you for lifting up the market sentiment. But Bob, you were outdone by Chris.
Yeah, but he's an insider.
Chris, I read in the South China Morning Post that you recently dropped over $500 million to buy one of the largest houses on Hong Kong Island. I'm starting to see a trend in your bottom fishing. Please share with us your outlook on Hong Kong and the market.
Well, okay. I was going to say, but it sounds a bit ridiculous now. I was going to say, by philosophy, I'm a value investor. And people who understand Hong Kong property know there have been very, very few bargains and very little value in this market in residential for a long time. And, I think the market obviously has come down a bit. And, my wife and I, and, having lived here for 24 years, probably was about time that we actually bought something. So we took the plunge and bought I think a very interesting 100-year-old property.
It's amazing, yeah. Thank you for putting the mojo back in our market. Something, actually, both of you were outdone by Jean Salata from the previous panel, but that's another story. Michael, if you feel left out, we have colleagues.
I want to see if I can find a real estate broker for the panel.
We have colleagues from our land.
Send recommendations.
Yeah, that's right. We have colleagues from our land department on standby, and they will show you some exclusive land parcels. Yeah, no problem. Okay, let's move on. Let's move on to talent and succession. Bob again. So Bridgewater has managed succession extremely well. There was a smooth transition from Ray Dalio to a new management team. And you have now groomed Karen Cornell-Tembo from your intern to now your co-CIO. This is at a time when many founders will simply fire potential challengers or sell themselves to BlackRock. Please share with us your philosophy and culture. How do you groom your talent?
Well, first of all, we have 2 co-CIOs that started as interns at Bridgewater. So Greg did as well. So, well, I think, I think there are a few key ingredients behind that. And I think it really actually starts with how we manage money. We have a fundamental systematic investment process, which means that we pre-specify all of our criteria for decision making. And from a knowledge transfer perspective, that can be handed off to the next generation and built upon. So you're not starting all over. I think a second thing is culture. It's super important. And the culture is an environment where we're explicit about the culture. And so the culture is sustained over time. And that supports transition. I think also those things also lead to that we've had a lot of longevity. I've been there 38 years. Greg's been there 28. Karen's now 18. We're bringing the next generation along. And I think 30% of our workforce has been there more than 10 years. So we've had a lot of longevity. That is very good for transition. But I think, and then I think given that sort of foundation, it was also very important that, you know, Ray, more than 10 years ago, said, okay, we need to think about transition, and this is probably going to take a decade. And so it was a very intentional process carried out over the course of a decade plus, from a number of different angles, and you know, I think that's probably what it takes.
Congratulations. I'm sure Harvard Business School will do a case study on you, or probably already have. Michael, you work with many successful hedge funds and PE managers. What is your secret of their success in attracting and retaining talent?
Well, I think it's a sort of a variation of, a variant of that answer. To me, intentionality and culture. The reality is, it's a people business. It's a mobile business. It's a little bit like academia, where professors can move around, and so you really need to be intentional with regard to the your team, the development of your team, and planning for succession. We plan for contingency, which is frankly, you know, a little different from succession, and we plan for succession, and it's something that we work on with our leaders, and we try to have buy-in for. But it's really, to me, culture is the issue, because the economic opportunities for people in our world and in our universe, the alternative investment space, whether it's hedge funds, private market, are significant, and I don't think you do this by compensation. I don't think you can be successful by, you know, golden handcuffs. Those are, you know, fair compensation and proper structure are part of tight and strong and enduring teams. But it really is, to me, intentionality, planning, communication, and culture is critical.
Thank you very much. We have a few minutes left. So let's have fun with some quick-fire questions. The rules are simple. Do not think on your feet. Just shoot from your hip. There are no wrong answers, okay? First one. So the theme of our summit is sailing through changes. So imagine that you are the captain of a sailboat racing across the Pacific. However, a Category 5 hurricane is coming, or Typhoon 10 equivalent in Hong Kong. Now, thankfully, each one of you will be granted one trump card each. Can you pass it on, please?
What are we doing?
You can just hold on to them and then show them to the audience, one side. These are so beautiful. These trump cards are mega. They make everything great again. So you have a choice. You can either upgrade to the best sailing crew in the world, not any crew, but the winning crew of America's Cup, or you can upgrade to the best sailing boat in the world, not any boat, but the 500-foot unsinkable yacht owned by Jeff Bezos, or you can upgrade to the best satellite system for the best storm data. So not any satellite, but 10,000 Starlink satellites by Elon Musk. You may only choose one. Don't need to choose the one you're holding, but maybe I'll start with Michael.
I'll actually go with the one that I was handed, which is best crew. And I think that an experienced, incredibly capable team is very, very valuable.
Thank you. Bob?
I'm not going with Jeff Bezos and the biggest boat. I'm going with the best crew. It's not what you got, it's what you do with what you've got.
Ooh, okay, very good.
I'll go with the best boat, because I think even a good crew in a small dinghy is going to have a tough time. So, and there's probably some good wine hidden somewhere on that boat as well. So.
Good choice. I'm a data person, so I always go for the best data, because with the right data, you just stay in port, don't go out, have some nice cocktails. Yeah. Next question. What will be the biggest surprise of 2025? What is the biggest thing flying under the radar screen? What will surprise us next year? Michael?
So I think there's an expectation of significant change, great change. I think that we're talking about massive change to the economic structure, and that's maybe an expectation now with tariffs and significant cuts in tax revenue and significant changes to the size and scale of the government in the United States. We're hoping for, and I'm certainly hoping for, an end to the wars that we've seen over the last several years. And there's been an expectation, I think there is an expectation that maybe those will end quickly. And to some extent, I think that the biggest surprise might be that when we gather a year from now, there's not as much change as we are expecting today. That, figuring out what happens to tax policy in the United States is not easy, despite the strength of the election victory and having both chambers of Congress. That type of change, order of magnitude change to the size of the government and the government services is not easy, no matter how brilliant and aggressive Elon Musk may be. That is just not easy to take, 2, 3, whatever the number is, $1 trillion out of the government. So I think there's a shot that we're sitting here in a year and there is less sort of, and God bless, let's hope that we can end the wars that we've seen. But those aren't simple situations either. So my fear is the surprise is we sit here a year from now and there's not a lot of change that's occurred.
Okay, this is a quick fire question, so we need to be fast. But thank you for that.
Yeah, I see we're over. I'll give you the short one. Just better than 50% odds on a rational president.
Oh, okay. Chris?
Well, I hope it'd be great if we saw peace in Europe and peace in the Middle East. I think that would be great. I think having been in New York last week, I was really surprised. I mean, there was a lot of bullishness about the positives and pro-growth, etc. But I think, if inflation really comes back next year, I think there's going to be all sorts of interesting things happening in markets.
So we're all sounding like Miss Universe candidates. World peace, world peace, world peace. Great. Okay. Next question. Knowing what you know today, what is one advice that you will give yourself 20 years ago?
Knowing what we know today, it's got to be get levered long and hold on, right? But aside from that economic piece, I think take a little more time. I've been here regularly for a long time and all over the place, and I do wish I had spent a little bit more time, bought an apartment, something like that, and that would be the advice I'd give a 20-year younger person.
That's right. Bob?
Private assets.
Good. Chris?
Well, I think, the biggest, and Steve Schwartzman said this to me once, if you build a new business, only bet on a 10. And I think, where I've made mistakes along the journey, it's been generally about, people. So I think, you absolutely, particularly if you diversify in this business, you have to have absolutely the best people.
Very good. So knowing what I know today, after today's panel, buy the biggest house in Hong Kong 20 years ago. It was SARS. It was a great time to buy. So good one. Last question, quick one. Share a special skill or talent that you will do in private that few people know about. Please keep it clean. We've got room full of regulators here. Michael.
Well, I'm not sure it's a special skill or talent, but the thing that I think would most surprise my team would be to see me with my 1-year-old granddaughter, you know, rolling around on the floor, talking in silly voices, and putting on puppet shows. So I think
Very good. Bob?
I'd say the talent is only moderate, but I play trumpet.
Oh. Chris?
I spent a long time thinking, and unfortunately, I'm incredibly mediocre at pretty much everything. But maybe something that some people don't know. With some friends, 15 years ago, we started and built a music festival, which has become the biggest music festival in Hong Kong.
Wow.
Which starts next Friday. So please all buy tickets and come along.
Fantastic.
Yeah.
Fantastic. Well, I love to cook for my friends and family because I think politics divide, but food unites. All right. Thank you very much. You've all been great panelists. Thank you.